Hello and welcome to this edition of the Market Share. I'm Paul Gifford, Chief Investment Officer, and joining me is a regular, Erik Clapsaddle, our Director of Fixed Income Research. Erik, almost all of our videos have something to do with the economy, and we're going to continue that trend today. But what's different is you might not have all the data when it comes to the economy. So can you talk a little bit about the government shutdown and what data is available and not available?
Sure. Well, unfortunately, during the government shutdown, the majority of economic data, especially the stuff that we rely upon, is not going to be available. For example, inflation, which includes things like the producer price index, consumer price index, not available. A lot of the job and labor market data, which includes unemployment rate, change in non-farm payrolls, initial jobless claims, they're not going to be available. And a few other things like housing starts, retail sales, and consumption, they are also not going to be available. If you think, where is it not coming from? Anything that's been released by Bureau of Labor Statistics, Bureau of Economic Analysis, Census Bureau, they're not putting anything out there. On the flip side, we are still getting some stuff from the private sector and the Federal Reserve, which of course remains open through the government shutdown. You'll see on the chart here, ADP issued a payroll number on October 1st, and they show payrolls declined by 32,000 in September, which was the worst result since March of 2023, though I would reiterate ADP, or I would mention that ADP is not always the most reliable source. On top of that, Standard & Poor's, the Institute for Supply Management, released economic data both on the service and manufacturing side, which includes some inflation and some employment data. The Fed will release some data on consumers, consumer credit, industrial production, but the majority of it will not be getting released to us.
Either way, we're going to have some ways to look at economic data just through different lenses. As we came into the government shutdown, what kind of economic data had we been seeing as we go into the fourth quarter?
Sure. So we wrote about the labor markets in our last market share approximately 2 weeks ago and what we've been seeing there. And the labor markets have gone from being incredibly tight, meaning very good if you're the employee, back in 2022 to still in a good position today, though things are slowing. And we even see them taking more of a negative tone these days. And to be honest, that's why the Federal Reserve cut rates. Inflation hasn't got to where they want it to be, but they are seeing the labor market slowing enough that they're trying to be a little proactive on top of that. So a few highlights there are the past 2 months, the number of unemployed people have exceeded the number of job openings out there, which has been in the short term an anomaly. You can go back to 2021, the last time that was flipped, but longer term, that's actually the normal to have more unemployed persons than actually job openings out there. Also the underemployment rate, which is a more encompassing rate and includes things like part-time for economic reasons, marginally attached to the labor force, that hit an all-time low of 6.6% in the end of 2022, and it's been moving up ever since, and today we sit at about 8.1% there. You'll see on this chart here, the Fed's favorite inflation gauge now sits at 2.9% and continues to be a little stubborn. We've been seeing inflation data hover anywhere between 2.5% and 3% on an annual basis, pretty much across all inflation data. It's not terrible. It's just higher than desired and should keep the longer end of the yield curve a little elevated. Third quarter GDP today is forecasted by the Atlanta Fed to be around 3.8% through their GDP Now model, which is more of a real-time model. They're always pumping in every moment of data they get, which actually at this point might be less data, but it's a real-time number. And 3.8% in the third quarter, that would be a very big GDP number if that actually comes through that good. To sum it up, what would I say today? We're seeing, stable, slowing inflationary pressures, but they're still there. The labor markets continue to be solid, and we're seeing moderate growth. Obviously, if we get a 3.8% GDP number in the third quarter, that's going to be excellent.
What is going to be some of the data that we're going to actually be able to get, whether the government is open or not, that we'll be paying attention to in the coming months?
Sure. So it's a great question. We are on the cusp of third quarter earnings. Earnings season is upon us. I can't believe it just seems like it was yesterday that we were talking about second quarter earnings. But it'll be nice to kind of pull away a little bit from honing in just on the economic data and really see what's underlying the overall stock market and the economy. We've already started to get some numbers in. You're going to see on this chart here what's left for the rest of this week as far as earning reports go. And there's some pretty big names on there. We have Bank of America, Abbott Laboratories, Charles Schwab, Taiwan Semiconductor, American Express, Schlumberger, just to name a few. And we've already had a few notable results. Tesla reported vehicle sales for the third quarter already, and they hit an all-time high of 497,000. They deployed 12.5 gigawatt hours of energy storage products, both all-time highs. But again, a lot of this dovetails back into the electric vehicle tax credit of $7,500 expiring at the end of last month, September 30th. So some of that would be attributable to that, but still a great quarter for Tesla. Constellation Brands announced recent earnings, much better than expected, though would be remiss to mention that consumer preferences have significantly turned away from alcohol. We've seen numbers there really decline across the board. And then even outside of earnings, more of capital markets activity. Fifth Third on this past Monday just announced that they are going to acquire Comerica Bank, ultimately making the ninth largest bank in America. We are going to keep a very close eye on quarterly earnings, analyzing what we're seeing. We think we're in a bit of a transition period, not just domestically, but across the globe. Geopolitics is at the forefront of everything, it appears these days. Fiscal policy changes, not just here in the States, but really in many developed countries around the world, and a fairly rapid and changing and improving artificial intelligence, technology, and innovation throughout the planet.
So there's plenty of things for us to keep track of.
Absolutely.
Even if we're not always getting the economic data from the government. We still have plenty of things to keep an eye on the markets and help make good choices for our clients. Erik, really appreciate your insights today, even with limited data set. That still works. If you enjoyed today's video, I encourage you to share that with your friends or family. If you do not currently subscribe to the Market Share, you can do so using the QR code at the end of the video or sending an email to wealthadvisoryservices@firstsource.com. And as always, thank you for the opportunity to serve you and your family, and have a great day.